Gold futures performing better this Thursday, but gold producers not as well, with Goldcorp leading the pack. Second quarter results have started coming out, and they issued a massive loss of $1.93 billion, that's with a B, dollars. We have Jim Wyckoff up next. Jim, thanks for being with us this Thursday, as gold is definitely firmer amid a weaker U.S. dollar index. What are we seeing on the markets?
Good morning, Danielle. Always nice to see you. What we're seeing in the gold market today is some backing and filling, some chart consolidation. I think the important thing this week, though, is that we saw a multi-month-old downtrend on the daily chart negated in August gold futures. Now we've got about a 4-week-old fledgling uptrend in place on the daily bar chart. That begins to suggest that the gold market has put in at least a near-term low. Certainly the bulls have much more work to do in the near term to suggest this fledgling uptrend can be sustained, but they're on the right path as we speak.
Jim, is it too early to tell if this was a relief rally or the beginning of something bigger?
Well, Daniela, it's always these small rallies, these early uptrends that turn into bigger trends. So right now, the bulls are gaining a bit of power, but certainly they have much more heavy lifting to do to suggest this price uptrend can be sustained.
And while gold may be getting some help, Jim, gold producers, on the other hand, their story not so optimistic. We're seeing second quarter results come out. Goldcorp is leading the pack with a massive loss of $1.93 billion. They suffered a major write-down with their Pensaquito mine in Mexico. What do you make of the story we're seeing on the gold producer side?
Well, we're just seeing the lower price of gold reflecting, poorer earnings for companies that are associated with the gold market. So, these gold companies and everybody else, we're looking at the charts, seeing if this fledgling uptrend can be built upon, and to see if this market has indeed put in a near-term low.
Jim, and in your AM roundup, you write how gold producers are actively de-hedging because of these lower gold prices. Is this a new phenomena?
Well, Daniela, for example, a year ago, gold futures prices were much higher than they are now, and producers could lock in a good price, what they perceived as a good price then. With gold prices now not that far above multi-year lows, the producers are thinking that if the price can rally, why hedge it at these lower price levels?
Jim, and what does that mean for an investor who perhaps wants to buy into these mining stocks now?
Daniela, I really don't follow the mining stocks that closely. I follow the price of gold. And certainly if we see, gold prices move above resistance at $1,350, that's going to not only invite some interest in the gold market or the physical market and futures, but also probably the stocks as they see that prices have, put in a bottom.
Let's talk those gold and silver prices now. Jim, last week when we spoke, you gave gold and silver a rating of 3.0 and 2.0 respectively, definitely in the bearish camp. What rating are you looking at this week?
A little bit higher, Daniela. Still, in the bearish camp, I'm giving gold a 3.5. We've got solid overhead resistance in August COMEX gold at the 1350 level, solid support at 1300. Giving silver a 3.0 rating for Wyckoff's market rating, a little bit up from last week, but still, like I said, the bulls have more work to do. Overhead resistance in silver is $21, and that's basis COMEX September futures. Got solid chart support at last week's low of 1921 and change.
Jim, finally, before I let you go, we've had a lot of bearish talk recently, people speaking about how gold will enter perhaps bearish territory for 5 years. But this week, we kind of saw a turnaround. We saw famed newsletter writer Dennis Garman come out with quite a bullish statement for gold. He's optimistic on the metal. Do you think we'll see a turnaround in terms of sentiment for gold?
Well, Daniela, I've been following the markets on a full-time basis for almost 30 years. And what we are seeing is the general public, the investing public, analysts, pundits, all have become so bearish to the gold market that is an indicator to the veteran market watchers such as me that that once that sentiment gets so bearish, that's a very solid indication that the bottom is near and that the sellers have become exhausted, and the smart money and the bargain hunters are looking to step in.
Fantastic, Jim. On that note, thanks for being with us.
Can't wait till next time, Daniela. Bye-bye.
Thanks for watching Technically Speaking. Email us, newsfeedback@kitco.com. Thanks for watching.